It's a very unpredictable time within the Toronto real estate market and the GTA real estate market. That is not to say that there aren't certain metrics, certain common sense economic criterias which we can take a look at in hopes of anticipating what's to come in the near future. Those always exist. However, we are really much so tethered right now to the CPI, and as a result, we are further tethered to the Bank of Canada and their interest rate policy. Are they going to increase? Are they going to cut? Are they going to hold a pause? And as a result, as CPIs come in, as we try to anticipate how the Bank of Canada is going to react to the CPIs, we are in very unpredictable and confusing scenarios where we don't really know what the Bank of Canada is going to do next. I mean, take for example this latest CPI that came in, this latest consumer price index, which came in at around what people were expecting, maybe on the lower side at 3.4% for the month of May 2023. Well, you would think this is great news for interest rates, right? It came in somewhat lower than people expected. I mean, at the headline level, inflation did drop to 3.4%, and this was following a 4.4% increase in April. And this has been indeed the smallest increase since June 2021. However, there's more complexities. When you exclude gasoline, well, guess what? CPI actually increased in May, upwards of 4.4%, because gas did a lot of the heavy lifting. Gas was substantially down. And when it comes to real estate, mortgage interest rates rose 29% in a year-over-year basis for the month of May. And guess what? This was following also an increase of 28% in April. And this mixed bag of a CPI we have will impact what the Bank of Canada is going to do into their next meeting, which is occurring July 12th of 2023. As of time of recording of this video, it is July 4th. So for all we know, a 25 basis point increase is likely. I think equally as likely is a pause, a continuation of the pause, especially when you consider how much mortgage interest rates are contributing to the CPI. I think one thing that is for certain, though, there's no rate cut coming. So when we see in fact that a rate hike and a rate pause is equally as likely in the July meeting, it's very hard for us to maneuver the Toronto and GTA real estate market. And I'm not just saying this as a person who makes content on the Toronto real estate market on YouTube, on social media platforms. By the way, as always, this is Sam from SaberiSixRealEstate. My contact information is on the screen. On this channel, we like to discuss all things Toronto real estate market oriented, market stats, market trends, news items, buyer advice, seller advice, pre-construction previews, condo building reviews, and so much more. So if you find any of this very informative, feel free to subscribe, comment, rate, and review, or get in touch with me with the contact information. Anyways, enough of that. As I was attempting to say, it's not only hard to maneuver on paper, on the ground. I'm in conversation as a Toronto real estate agent with a lot of buyers right now, with a lot of sellers, and they're trying to time the market, which is a fallacy. But nonetheless, my job is to give them some sort of guidance on these macro issues and how it will impact their buying and selling circumstances. But I thought amidst all this confusion, amidst all this unpredictability, which I will cover without a shadow of a doubt in the coming days, one thing that will be really interesting to look at is where are properties getting relisted the most. Here, relisted essentially means terminated, right? There are some key differences, but for the sake of this video, the sake of this conversation, we can look at them as, pretty equal. Now, what does relist mean before I get into the numbers? Well, when a property is relisted, it essentially means that the homeowner attempted to sell the property, listed it on the market for sale, and failed to sell that listing, and essentially as a result, terminated that listing in order to relist that listing, whether this relisting is happening at a lower price or whether this relisting is happening at a higher price. That comes down to different circumstances and the strategies that we're employing in the first place. And in order for a property to be relisted, it would have to be terminated first. Essentially, this is also a great way of looking at where properties are getting terminated the most after coming on market. Now, one key emphasis here is, as I said before, one key point of emphasis, as I said previously, this video is being recorded July 4th. As a result, we do not have the full June numbers out as of yet. So here we're looking at May numbers insofar as we're looking at the relist report for May numbers. What does this report contain? Well, let's take a look at the relist report and I'll break it down for you quickly, right? We have the relist report right in front of us. In the first major column, right, we have May 2023, and in the next major column, we have year-to-date 2023. So let me break this down a bit further, right? For instance, May 2023, we're gonna take a look at new listings and how many of those new listings, so properties that came on the market for the first time that month, May 2023, how many of them were relisted in the next minor column, and in the third minor column we're going to see the share. So it's basically a percentage, and this percentage represents the relists divided by the new listings. And here on this leftmost column we have all the municipalities. We have the main municipalities, of course, being Halton, Peel, City of Toronto, York Region, Durham, Dufferin, and Simcoe. For the sake of this video, we're going to only focus on mainly Peel, City of Toronto, York Region, and Durham Region. Of course, if you have any other further questions about other areas not discussed, feel free to get in touch with me. But let's look at the all TREB areas. This is the first row, and this is the most important one, right? Yet the most general. All TREB areas pretty much means the entirety of the GTA. So this is composed of all these areas, right, in one. We see in total, in May of 2023, there was about 15,000 new listings. And of those 15,000 new listings, about 1,600 of them were relisted. This gave us a relist rate of 10.6%. Now let's compare this to the same concept, the same idea, but for year to date as opposed to May 2023. Because year to date, we see once again 53,000 new listings in all TREB areas, which is once again equivalent to the GTA. We see a total relist number of 6,983 to be exact. And this gave us a relist share of 13%. Now, one thing off the bat you have to notice is that the relist share for just the month of May is lower than the relist share for the entirety of the year so far, year to date, which is in this case, year to date was as of May, right? Once again, I want to preface, we do not have June numbers yet. And we're going to notice this trend all the way down, right? Give or take, for 95% of the municipalities, the regions, we're going to see that the May relist share was far lower than the year to date relist share. And why is this the case? Well, May was a very, very strong month. May and April, but particularly the first 2 weeks of May, I would say, was scorching hot for the Toronto real estate market. As a result, obviously, less properties were failing to sell, less properties were terminating, and as a result, once again, in conclusion, less properties were relisting, relative, of course, to the number of new inventory. And if we come here and maybe focus on the City of Toronto, right, we see in the City of Toronto as a whole in May, there was about 5,700 new listings with 616 relists, right? This gave us a percentage of 10.7%, which, as we can see, is very close to the relist share for the entirety of the GTA. Similarly, on the other side of things, the year-to-date figure also in the same situation, where we see the year-to-date figure for the relist for the entirety of Toronto, right? Out of 2,000 new listings, out of 20,000 new listings with 2,600 relists year to date, we see almost a 13% relist share. Once again, very much so close and on par in an uncanny way with the relist share for the entirety of the GTA. And when the entirety of the GTA number is very close to the Toronto number, this clearly indicates to me that, you know, no surprise here, Toronto is a major mover and shake in terms of influencing overall numbers for the entirety of the GTA. And there's no question about this, right? And it's pretty common sense. I mean, Toronto had, as I said previously, a total of 5,700 new listings. As a region, this is much higher than the Peel region, where we're looking at 2,900. This is much higher than the York region, where we're looking at 2,800. Although York region and Durham region might be bigger in terms of land mass, in terms of inventory, they're clearly not bigger. So naturally, Toronto will impact the overall figures the most out of all regions. But, you know, let's push past this a bit for a second. And of the major regions we're going to cover in today's video, Let's take a look at which regions performed the worst. And that's going to be Peel region by a very, very slim margin. I mean, it's 10.8%, although year to date, it's 13.4% realist rates is the worst of all the regions. I mean, once again, you know, the city of Toronto was at 12.9. York region has been year to date at 12%, and Durham region has been at 12.9 once again. But once we go back to the city of Toronto and break it up by Toronto West, Toronto Central, and Toronto East, we see that Toronto West has had the worst realist rates in the month of May 2023, where properties are getting terminated the most versus Toronto Central and Toronto East. And this also holds up on a historical front year to date, where year to date, once again, Toronto West is seeing the most terminations and the most realists, because year to date, we're looking at 13.5%, whereas, you know, Toronto Central, we're looking at 13%, and Toronto East at 12.2%. But somewhat surprisingly, the area, or rather in terms of regions, the region that has been performing the best in terms of the realist rate so far in 2023 as of May. Once again, I'm waiting for June numbers to come out, and they should come out really literally the day after recording of this video, so stick around for videos on the June numbers as well. Nonetheless, though, putting that aside, Durham region seems to be the region that has been performing the best in terms of realist rates. Because when we compare it to all the other major regions, once again, York region, Toronto, the city of Toronto rather, and Peel, it seems as if that Durham region has the lowest realist rate of 9.6%. Out of 1,600 listings, only 158 terminated to relist on market again. And of course, this type of analysis, this realist chart, has its shortcomings and limitations. What about the properties that didn't terminate but essentially should have, because they stayed on market for 70 days and they stayed at the original sticker price, the original asking price, but ended up selling like $100,000 less, right? Those could have easily just went into the terminated pile, as a result then in the realist pile. So this data does not capture those properties. On the flip side of things, actually, interestingly too, when you think about it, this realist chart also doesn't capture properties that were made available for sale on the Toronto real estate market or GTA real estate market, couldn't sell, failed to sell, terminated, and they just didn't go back on market, right? Those terminations are not accounted for in this sense as well. So it's not a perfect chart. And as I always say on this channel, and if you're a client of mine, many of whom have reached out to me from YouTube for buying and selling, or my friends or my longtime viewers, you know I say that this is not a concrete science. None of this is a science. It's not physics, it's not mathematics, it's not chemistry. There's a lot of intuition also involved in assessing the data and using the data and using the quantitative. Of course, I always like to combine the quantitative with the qualitative as well, because I am, once again, not just making content online. I am a Toronto real estate agent who actively works for buyers and sellers across the GTA. And I can tell you from my personal experience on the ground, terminations have been up. But let me tell you why this may not continue into June. The larger trend I talked about earlier, where all the May realist shares were lower than year to date, indicating as a result that May was a very strong month, at least the first 2 weeks of May. That's what I was seeing on the ground. Let me tell you why this may not continue into June, because June was dramatically a much slower and much cooler market as compared to May. This is something I covered in my most recent videos, so it should be no surprise to you if you are watching this video and have been a long-time viewer of this channel. So as a result, when we take a look at the realist share chart for June, I don't think it's going to be the same case. I think for the most part, it's actually going to be on par with year to date. And the next couple of big items, right? Next couple of big items to take a look at is, as I discussed earlier in the video, the CPI came at somewhat of a mixed result, some good, some bad. So what is the Bank of Canada going to do in July? And in July 12th, I believe, is the next announcement rate. If they increase the rates, well, I think this is going to have a downward pressure, a continuing downward pressure on the market. And I think it's going to have a substantial cooling effect of the market. Not a crash, but I think the market is just going to get slower and slower and slower, and it's going to be advantageous to some buyers and it's going to be disadvantageous to some other buyers. However, if they do not increase the rates and keep the rates paused, they keep them as is, I think there is a risk that the market will not increase to the levels of May and April, but I think it's going to be a more active market compared to June, right? There is a chance where we see July be on par or a little bit higher than June, but not as high as May and April. As always, though, I cannot look into the future. If I was able to look into the future, I would not be recording this video from my office in Thornhill. I would probably be recording this video from my vineyard in Portugal. But such is life. I cannot see into the future, and neither should you try to. Anyways, as always, this is Sam from SaberiSixRealEstate and Remax Realtor Inc. Let me know if you have any further questions. If you do have any further questions or you need any help with any matters regarding the Toronto and GTA real estate market, find my contact information in the description box. Get in touch. Thank you very much for watching. Stay safe and stay tuned. Thank you.